The S&P 500, the Nasdaq 100, and might I say, today was a pretty big day for us. We need to talk about exactly how we're moving and why I do believe there's something in the water. Also, there was a very big trade announced today that I do want to discuss, and I definitely think you're going to be interested in, so stick around. Okay, so the first thing we'll talk about is the dip that happened kind of going over the weekend into this morning. A little bit of a dip, came into a level, obviously getting some buying pressure. Okay, I want to address a few things first before we even get to the technicals. When we look at inflation data, when we look at oil, energy data, we're going to have to see a little bit more. I think the tone has been set. I think there's a reason Fed members haven't spoken yet. But I also think it's very important that we understand this is like a snowball effect. When we look at slowing inflation, maybe even spiking inflation, most likely a snowball effect. Until this happened, we were full steam, full bull ahead. As we are piquing our interest in energy and inflation spiking a little bit on PPI, CPI was down, I think there's a little bit of snowball effect happening here that we need to be keeping track of. So that's the focus I want you to have in the back of your mind. Let's get to it. Okay, so the first thing I want to mention is the overall channel you're trading in. Very clear. You've been trading in this downward channel. You can really rise it up just a little bit, raise it to about right there. Sorry, it's kind of got it messed up in the scheme of this, but you're trading in the channel to the downside. Raise it up, not rise it up, right? On the Nasdaq, clearly in the downtrend, right? You're still just perfectly in sync there. You're coming back into your previous lows you kind of established here. I would suspect you get a test around 15.34. Okay. Interesting behavior when we zoom in a little bit further, because zooming in gives us a really good kind of viewpoint here. Same type of action. 1, 2, 3, bounce, right? Similar to what we saw here. 1, 2, 3, bounce, and then ultimately started dropping back down inside that channel. A little bit of a stronger bounce here, but still, you're finding support at these, I don't want to say random levels. I don't want to say random. You know, it's 15,000, makes sense. But with what's happening in the news that's being portrayed on the market, you would assume sellers would step in. I'm just saying. If there's been a time for sellers to step in, it's like right now. They should be stepping in, but they're not. They're not, okay? We look at volume and also see what's happening here on ES and the volume established here. 47 million, a nothing burger of a day. So again, definitely want to be watching what's happening here, right? We're going to go to TradingView in a second. ES, a little bit more interesting. Definitely weaker than the Nasdaq if we look here. Still operating somewhat in a channel, kind of like broadening, but still kind of operating in it. Pretty ugly, right? Still moving down. The biggest area you're watching here on ES is the 44.95, which is your previous 52-week high right here. Our 52-week high now is roughly 46.34, but this was your previous high before you broke out and made that new local high, almost, 150 points to the upside, right? But this is where you're at. Now, if we look at the action here as well, like the 5-minute, you can see like all day long, even last night. So last night, you kind of push up from midnight until like 4 a.m. You hit 4,500, reject hard, come back down at market open, and you bounce at like 9 o'clock, right? Similar behavior. Like you just following kind of the Nasdaq right now. But if we look at the movement here on ES and the Dow in comparison to Nasdaq, you could argue, someone would argue rotation and attack or things along those lines. I would not. I would say you're getting more of a, I don't want to say a dead cat bounce happening here, but you're coming into, again, 15,000 is a major level. Like it is what it is, right? Just like 16,000 here on Nasdaq was a major level, right? So this is just a really big level that we're watching. And if I look at volume and how it's being established on this bounce, I would want to see more volume on a reversal sign. Personal opinion. So I don't think there's a signal yet to be buying, which is kind of the narrative I've been saying. We haven't had that real signal yet. Now, if we look at data that's come out over the past week aligned with this, it's even more of a signal not to buy right now for me. Okay, those are big things. Now, before I tell you the big juice, the big spill, and we're all going to have a million questions down below about, consider liking, consider subscribing, helps out a ton. The Discord link is down below as well if you are interested. But again, never want to push anyone to do any of that. But I do encourage you guys to like and subscribe. Helps out the channel tremendously. But the big news today was that Michael Burry, everyone's obsession with Mr. Big Short, is this position today. He basically got his entire portfolio. This is his 13F that he filed. He said, everything I own, I'm going short. It's like 93% of his portfolio. I'm not going to comment too heavy on this because this is like, it's a pretty heavy position. It's a pretty heavy one, not going to lie. He went heavy into the downside play here. But I am going to say, I understand where he's coming from because he's looking at it from a pure fundamental viewpoint. He's not looking at this from a day trader, a 2-month swing trade potential. He is looking at this from a fundamental window. His eyes are like a horse that's racing straight ahead. He has everything else out of his peripheral. He is looking at data and what's happened. And I don't find it coincidental that this gets leaked or that this gets dropped or this gets filed 3 days after PPI data comes out. I'm telling you, the only thing that could bring the market down and the only thing that will change the overall trend is data. Okay, nothing unless you go to war with China, right? That would also be pretty bad in the short term. Okay, but data. I cannot put enough emphasis on that. Okay, I cannot. I do believe I'm not putting my entire account short. That's absurd. That's crazy. But I do believe we could be at the start of something pretty interesting. I'll come back and update you guys on this if I see anything that's updated. But yeah, this is crazy. Like 1.6 billion. He put the entire house on it. Like Ali, we're margining. We're leveraging the house. Okay, babe. Right. That's like crazy. Right. That's absolutely wild. But anyways, pretty wild. Okay. So that's the big thing going on here. Other than that, I'm not going to give you a clear direction of the way the market's moving right now. For myself, the day trades have been minimal. They've been extremely tight. Extremely tight. I think day trading this action is a mistake until we get some confidence and get some extreme clarity in the direction in which we're moving. Okay, because this whole 30 points a day chop back and forth is not it. It is not. It's not the action that I want to trade, nor will I be trading. So I do want to say that. But if we look at some of the action that's happening here, like on the daily, again, like you get a close below, like the Friday's close, it was not good right here. This is Friday's close. Below that 44.95, that was a great close to the downside. And you pop back above here, right? So unless you get a really nice engulfing into tomorrow, the reaction that you're seeing here is ideal. I post this on Twitter and I keep updating. This is like as good as it's going to get, right? This is the chart right now. Like this thing's, previous 52-week high. You have a daily gap there as well. You fill the gap, you're bouncing out, you're pushing up. From a pure technical standpoint, it makes sense. Okay, it does. But I'm even telling you right now, I don't have the confidence in this move. I just don't. I just don't. Even on the breakout that or push up that you're getting, it's still a lot of declining volume, right? The most volume you had was right here when you kind of had this really nasty wick, which again, I don't love. I'm going to tell you, was back on August 10th. Not a great candle. If you can see some increased volume pushing up, I would maybe get on that side of it. But that's like where I'm at right now, especially as we were going into next week. What is next week? Okay, I encourage you. I'm going to give you homework today. Go look up Jackson Hole dates, Jackson Hole Fed meeting, whatever, 2022. Look at the dates that Jackson Hole happened, and then look at what happened the week of Jackson Hole and the week after Jackson Hole. Okay? That same week is starting next week, the 22nd through the 24th, I believe. Okay. When we look at that action, I'm telling you, there is a high impact of what will happen from Jackson Hole. Highly likely. It's also very important that Jackson Hole is coming up, and guess what? We just started to get some data that's not our best friend lately. Okay? So those are things we need to look at. But what I will say, when I'm giving you a feel or a visual of what's kind of being said by the Fed, I don't think the Fed's going to come out too negative as a whole yet. Until we get more reoccurring data, just like we had to get a lot of good data in a row before we started taking off to the upside, you're going to have to get quite a bit of bad data in a row to signify that, you're starting to get a little bit of a reversal on inflation, right? Now, again, I will say a lot of these warning signs are here from a fundamental standpoint. The 5-year yield, or the 2-year, I'm sorry. Dear God, this is terrifying. You are just going up now. You're at almost 5% once again. That's a no-no. That's not good. That's bad. The 5-year, yes, you're trying to break out here. Is that an ascending triangle? Arguably on the 5-year yield, potentially. Absolutely terrifying. The 10-year, well, it's already about to break out right now. The 30-year, help me God, right? They're all just going crazy, right? They're just all moving rapidly to the upside. You can't even invert because they're moving so quick, right? So that's where we're at. On top of that, oil is sitting at the breakout point as well. If oil breaks over like $84 and holds, you're most likely running into $92 on per crude, right? Per barrel. Okay. That happens. It's going to overflow directly into inflation data. Promise you, it will. And this last month, energy data did not account for this giant move up. It did not. Take it, believe it what you want. I talked about it. It did not. So I'm fully expecting this next meeting, next CPI, PC, whatever. I anticipate oil and energy data to greatly impact it. I'm curious to see what happens, but definitely going to be watching. Probably be a fly on the wall, not in too many positions. If we just stagnate here and we stay at 82, it's also not good. Not good. So we're seeing things line up that just are bad, right? Just fact of the matter, we're seeing things line up that we didn't want to see. On top of that, the dollar, DXY, again, dear God, absolutely terrifying, right? We're at that level. We've had it marked out, descending triangle, false breakout, broke back up. You based and pushed even higher. All day long, the dollar, all day long, you've been moving up. All day, right? So we look here. First hour of trading, yeah, you broke into local highs, got rejected, pushed back down, and then obviously we just basically broke all the way back up to 103. Again, I mean, not ideal. Here in the after hours, we're seeing buying occurring. We're seeing more upside kind of coming to the market. I just have to say this. Until we get to certain levels, until we get confirmation, until we get, at least a little bit more confidence here, it's a sideline play for me right now. Okay. I don't want to go full fundamentals because, again, we've seen how that can backfire in the long, the grand scheme of things, right? If you go pure fund, if I run pure fundamentals from February till, a month ago, right? I might have lost some money, right? I might not have had the greatest time like I did, right? So I have to say this with a grain of salt of going both ways. For me, it's a lot of indecision in the market. You're getting some upside, and again, grand scheme of everything today. You finished up like, what was SPY up today? 0.5%. Nothing crazy. You kind of got back to where you started at. What was Q's at? Q's probably up like about 1%, I would assume. A little over 1%, right? Those are the worrisome parts. Is that, yeah, you had a decent day, but at what cost? VIX, I will say, VIX is not your friend. VIX is doing nothing. It's abysmal. So these are all things to be watching, to be considering. But as I look at the market, I am left with more questions here. Okay. I think you're in a dangerous territory going forward. And I think you need to be cautious more than anything right now. I can only say so much. It's my personal opinion. Short term, I'm looking for a 15.35. I want to see the reaction at this level. If you reject it at 15.35, I think it's pretty bad. I think it's pretty gross. I'd be looking at that. ES SPY. Honestly, maybe like 45.30, 45.20. Maybe that's where you're looking. I just don't see too much here. The fact you're bouncing like this is a good thing. But again, you want to see if you can hold this 44.95. You should get a retest no matter what. But these are all the things I'm watching for, the warning signs, everything in between. If you have questions, comment down below. I'll see you guys tomorrow. Have a good one.